not accrued because the entry which I passed recognizing interest income did not reflect the real income. Now, so in this context, now if we evaluate this issue is buying, not crediting income itself amounts to my saying that income is not accrued or is a waiver. Now, who is the best judge to decide whether income is accrued or not? Me or the assessing officer? Of course, we have a concrete judgment. We say that no, prudence of the assessing or businessman cannot be questioned by the assessing officer. So again, come to the facts of this case. Whether the facts of this case, the assessee has at least prima facie bona fide. Assessee can prove that my estimate of bona fide. I am not going to judgment of TRS or other things that in matter of bad debts, we are writing off is enough. We are not on that issue. But when I am saying that this year income is not accrued and I am claiming the real income theory or whatever, then what is the prima facie material with me? Just here, I may say it is not accrued. Yes, you respect the assessee's discretion or the prudence. But here, probably the facts are a little bit big. Concepts are very fine in favor of assessing, but facts are that, as mentioned, that this is guaranteed by some company. The most important thing is drafting. See, if you minutely read the facts or the exact wordings of the restructuring, that is rightly pointed out by DR in the morning, only payment is postponed. There is not a word about postponing accrual. And that is why, friends, one has to be very careful by drafting, assuming you want to draft a waiver letter or a subject letter, because if you, as the facts are given in the case study, is that only the payment is postponed. Now, postponement of payment does not postpone accrual. Only you are giving that party some leeway or some liberty to pay me after 3 years. But there is not a word about all these years, no income, nothing, or no income did accrue, or I was not entitled to interest income, nothing. So in the facts of this case, it may be difficult for the assessee to say that income did not accrue because of the specifically wording of the restructuring. Now, issue may arise about the relevance of events occurring after balance sheet date. Now, what the argument taken place is, I think that when you prepare accounts, do you prepare account on 31st of March or do you prepare account, let's say I say in August, in this case let's say August 2007. Let's say I am finalizing account with everyone in August. At that point of time I come to know that this is not receivable. And I don't pass entry. So can department, you should have passed entry on 31st March since you have finalized account on in August. It is event occurring after balance sheet. So that is one issue according to, of course, in this case, SSCL before different filing, but that again I think according to me, no. Maybe companies that there may be a different accounting, I think standard 5, that even kind of balance sheet date, how, what. But income tax act, I think if a subsequent event has very important bearing on the very accrual of my income, of this 31st March, then why can't it cannot be taken into account? That's the point. So friends, I think this finishes this my thing. ITDS code, very simple, 5 minutes. ITDS code, I think ITDS preamble itself says that provision of ITDS will not override section 1 of provision of income tax act. So I think ITDS code, for the time being, we keep aside that if you are able to prove that my income is not accrued at all, under section 145, section 4, section 5, then I did not talk about ICDS. And ICDS, of course, ICDS is applicable, then the time basis is mentioned from the time basis. Now, friend, last question is again, very important issue, but I will be very quick. The concept of capital gain service transfer. I think I will try to answer with utmost respect. The Bombay High Court judgment may not be laid out the correct law in the way in which the department SSC may be interpreted. We have a decision of Madras and many judges. If you see the language, section 45, Sharmaji read section 45. Whatever income, profit and gains arising from transfer of capital shall be deemed to be the income of the previous year transfer to place. So you have a named fiction that if it deemed the income of the year it will transfer to place. So how can you tax a capital gain the horse transfer? And if the transfer taken place in this year, then capital gain to be taxed in this year. Where is the mechanism to tax a part of the capital gain in subsequent year? Because that year there is no transfer. So SSC may say, look, receive something but I not offer it because they will not transfer it this year. Now department says, look, we tax in other sources. They say, no, why the other sources? It's subject matter subject 45. You have missed the bus. So I'm just saying one possibility is that Ajay Golia judgment is mentioned. I think it's very clear on this point. Now I'm coming to the quantification. See, the issue is concept of accrual. As I said, did I ask the question, are you not offering income because it is received afterwards? Answer is no. That can be the argument, because capital gain we have got counter judgment to say that just because you have not actually received the amount, you cannot postpone capital gain. You may not receive it. Now there is a infant acute, and we have been champion making invitation before the CBDT or the finance ministry for so many years. We make provision for something. Like in business, we have a business laws of there is no provision for capital law, allowing capital law. But that apart, today there is no provision to allow you. But then can you postpone? So just because you receive amount something better, you cannot postpone capital gain. Now just because quantification is difficult, can you postpone? Answer is no. Because as I said, Krishnamurthy's case, Supreme Court has mentioned just because there is a difficulty in computing, you cannot disregard the provision of the law. And in fact, now you see that again all the judgments how it do back in reverse manner. In case of business expenditure, SSC used to argue that look, even though expenditure is not incurred, it may be difficult to quantify by allowing deduction, assuming it is difficult to apply warranty expenses. Warranty expenses on what basis we have been claiming, SSC is claiming, look, I don't know how much amount I am going to spend, but allow me to make some reasonable estimation, and the courts will agree, yes, even though you may or may not incur warranty expenses. But still, same thing, so it's reverse way. That the idea via media would be that at the point of time year of transfer, the SSC government should make honest attempt to estimate not only the basic 2 crore whatever, but depending upon whatever criteria, how much income would accrue and tax it. Or another issue is that by the time assessment takes place or the matter trial up to tribunal, at least you have got a fact before it. At least that you tax that fact. Otherwise, if you say accrual, because accrual concept is all the judgments are accrual on a normal business income, which is but capital gain you said deemed to be income of the year in transfer. So how you have to reconcile this thing? I think that's a very thing. And I'm sorry.
Reopening I can understand. Reopening is possible after seeing the fact that have received that can be information, you can reopen. That's okay. But first year when it was done,
no, but the question is how do you tax in something? In what way? Suppose SC does not offer, who will keep track of it? And whether what is compensation? Again, the issue is that what is right. That is why you said full transfer. Then for what I am preferring capital gain? It's additional consideration that is why there is a 45(5) to tax in our land acquisition matter. They have specifically taken care of such type of matter or section 155. But Parliament has not amended section 45 manner of section 45(5). So in course of land acquisition, here if you receive enhanced compensation, there is a provision to tax the enhanced compensation in the year of receipt. But there is no provision for other than taxation. That's what I think one has to now reconcile the ratio of Shetty case with the other principle of capital gain. Friends, with this I conclude. I'm sorry I was very fast, but I think I have to finish within short time. And I hope, of course, there have been many queries. I know many queries right from this. And even some other occasion, we would like to have more detailed interaction on this point. Thank you.
Thank you very much. It is time to recognize the group leaders now. May I request Class President Yatin Desai to come forward and hand over the momentous to the well-deserving group leaders who have taken efforts to deal with the case studies in group discussion and mock tribunal.